Hi folks, welcome to another clip here on my YouTube channel. I would like to invite you to another update regarding the German leading index, the DAX. And on top of that, before we get into the chart technical part, I would like to invite you to leave some thumbs up for this clip and as well to have a check on that red button at the YouTube platform to be a member of this channel. Very much appreciated if you do so. Alright, before we get into some, let's say, fundamentals on some data, we will check out the chart technical stuff right now. You see there's already tanking a little bit sub the 13,100 line the moment I'm speaking right here. It is 30 to 40 minutes to go for the closing of the DAX here in Germany. And you got to see a chart technical analysis from a longer term view. You see the pre-corona crisis high of 13,795.24 as a 100% FIB and the crash low of 8,255.65 as a 0% in combination with a couple of Fibonacci retracements you usually know, like the 61.8 and the 76.4. And on top of that, you see another Fibonacci retracement analysis, another FIBO analysis, and starting point at the 14,816.35 at a 100% right here, going up to that record high of 16,290.19 as a 0%, giving us some hints for the downside projections where we are already heading, as you can see right here. So you see a couple of arrows, of course, to the downside as well to the upside, and the typical green target zones and the red target zones. Right now we are heading down to that first red target zone at around that 12,431.68 as a 261.8 projection to the downside from that red Fibonacci analysis here. You see a next target to the downside in combination with that 61.8 level from the longer term analysis I told you just a couple of seconds ago. So that 1167.9 and that 12,487.90 in that area is something we could observe into the next week ahead. Just because we are heading into that first rate hike scenario from the Federal Reserve at March 16, and on top of that we are heading into the Quadruple Witching Day at March 18. So just have a marker somewhere to just remember that both dates are quite important for the German DAX and of course for a couple of other markets as well. Needless to say that all this kind of chart technical analysis somehow in that kind of a market environment we face because of Ukraine-Russia war, it's a war, it's nothing else, it's a war, is sometimes not easy to read. But let's stick to the numbers and let's stick to a box I added to this chart technical picture here as well. You can see that box here, which is something like in the color of pink or something between white and pink, and you see that there is 12,000 from the subline and from the upper line 12,500. Right now these are levels where a couple of papers out there remains to be seen if we are heading more south or more up the road, but this should be something like a box between 12k and 12,500 about the expiries and about the levels being interested until it comes to that Quadruple Witching Day. So just saying, a couple of target zones, of course, to the downside could be these two red ones, and we could run back into that green territory, which is at the pre-corona crisis level at 13,795, and the next one, which is the old neckline in direction of the 14,816 around here. On top of that, the relative strength index right now gives us an indication that we have something like an oversold territory right now. Could dip more to the downside with a short time bumper with a couple of 100 points. Whatever happens with Ukraine-Russia, something around the weekend, and we could have something like a night bumper into that scenario right here and bump back up above to that green territory. All is possible. It's a crazy market. Keep being something like secured somehow and don't trap into some obviously some nice chances. just wait if something is way oversold on the daily and weekly, and just have a chance if you do something like small positions, and don't overdo, please. Remember the 2 target zones to the downside. So this box I simply put in there in the chart technical pattern between the 12,000 and the 12,500 area could be interesting right now. Of course, this is something not hammered in stone. So usually that kind of papers about to expire in direction of March 18 could still move, of course. From the current perspective, it looks like we have something like a huge higher volumes outstanding in direction between 12,500 and 12K. So that looks like a nice zone to touch, to have something like a touchdown, and to possibly, let's say, screw in that area and bump up again back up to that first green zone I already described in that chart technical picture. Of course, this is a crazy market situation. Of course, this is scary. And on top of that, this is something we did not have the last years and decades in that kind of a direction. So this is something tremendously new to everyone. For me, for you, for the pros. Nobody, absolutely nobody has a glass ball where this kind of stuff is heading to. So the only kind of stuff we could do is just try to relax a bit and try to get off that kind of a market, leave it like that, and just try to have something like patience and grab some nice situation, some dramatically oversold situation we are already facing. Or on the other side is just building into that kind of a stuff we see with whatever you like kind of products, without leverage even, just to see that in the longer term perspective. The other way around, you could also do something like, if you are already doing that, stay short and just have something like securing the positions and moving the stop from above more and more to the downside into your direction. If that is your position, you've already been in there, comfy zone. Nice. Remember, a second part, besides all that stuff I already described, is the Federal Reserve. We are facing the first rate hikes, March 16, and Mr. Powell already told us that the Federal Reserve is about to hike all the year 2022. So he described that he is going to hike, and that the Federal Reserve is going to hike into the foreseeable future. So usually, you know that, I know that, a couple of big investors of course know that, and you see it is not only possibly with or without war, it is on top of that the Federal Reserve and a couple of other central banks stopping that kind of monetary policy we enjoyed the last years or more than a decade. So this is everything like a negative news cocktail for the current market. Nothing like a stock market, no stock market out there likes a scenario when it goes up with interest rates all the way through. So that's just the point. All right, wherever you are out there, hopefully somehow you will have a nice weekend. Always remember, there's one life out there besides stock markets, besides markets. Enjoy it as long and as much as you can. Have some nice couple of drinks possibly, and let's see and face us to next week to come. Thank you very much for your time and your attention. Bye bye. See you.